on the Twitter stream. Oh no, that's not good. Alrighty, guys. Well, all I was really doing I'm on Twitter now, but all I was really doing was talking about Apple's redistribution potential, kind of similar to the schematic of AMD that happened in Q1 of 2020. When was this? 2024, early, or yeah, summer of 2024. Yeah. So that's all I'm really looking at, and I'm looking for some sort of LPSY to be put in place as we trickle higher into the gap, and then we start to develop like new highs of distribution above this high July 7th. And if buyers really start to stall out as this one creeps its way to the upside into a very big spot like 220 to 224 by July 31st, or if we get the gap up into this upper gap range on July 31st, but we don't meet the implied move, I can get my hands on a pretty cheap, decently dated put, maybe all the way out to October. Could probably dabble into some end of August or middle of August for a trade that looks like this. And yeah, I'm just really feeling comfortable around this window of tech. So that's Apple. That's what I'm going to be watching. And from the smaller time frame perspective here, guys, if we do end up getting a rally to the upside, after maybe sweeping out this low down here at 207, back testing 206, just anything around the lower end of the previous week lows. I could be interested in a long side trade to then go breach the gap before earnings. I feel like they want to push this in, and I feel like they want to collect a lot of the seller inventory that is sitting into the gap, right? Because you guys got to think, are sellers really willing to press beneath 207, or do they want to sell 13 points higher and run this thing up and move their orders up into the report and let the run up happen and then redistribute on the report? I would think that they want to redistribute on the report and kind of close a lot of these bigger gaps, break through resistances, sell above those resistances like we have at 214.56, and then eventually find the continuation all the way up into 220/224 for the report. Now we go over into something like NVIDIA. I would say NVIDIA is just not something I really want to be touching. Do I think that they're selling each and every single high of day and then pulling their ask higher and then selling the next following day? I do, but a lot of the normies won't understand that and they'll say, oh, well, you're just trying to fight trend and you don't really want to be short this name. Like, I totally understand that. But at the same time, guys, this is whenever bad things happen. This is whenever bad things happen, especially whenever you start seeing a changing character on the hourly chart or on your 30-minute chart, just any smaller time frame where um, the continuation to the upside throughout the morning sessions becomes weaker and weaker and weaker right off the opening range. That's kind of what I want to see with NVIDIA. We just broke out with a really nice strong orb, and then we gave back most of those gains into the close with a decent wick on top of that daily candle. And that does not mean that that's top, right? I always talk about how, oh, redistribution's potentially starting on this name over top of its high, and then it's not top, and people were like, well, dude, you're so dumb. This is a easy long. Like, no, it's really not. In hindsight, yeah, it was. But this is the moment in time right now, whenever you do have a distribution schematic like set up, um, the risk reward becomes ridiculous here for a trade leading into windows like this, where the turning point can come very, very quick and in a very unexpected way. Like for example, we go over to SMH, and you guys know about distributions, you know about accumulations, you know how things work when you're at lows and you're breaking supports, and everyone thinks you're breaking supports, so it's such a free short. And same thing with highs, whenever you do have a range established where there's clear intention from sellers, and there's been clear intention throughout most of the year technically on them wanting to sell off semis, right? I mean, obviously there's some semis that look a little bit better than others, but the bottom line is that we topped out in July of last year, and then we put in almost like a redistribution on the smart time frame throughout quarter one, and then they completely capitulated it beneath the August 5th low, and they pulled this thing down pretty damn far into like 2023 levels. They ripped it higher, however, we're ripping it higher, right? Just ever so slightly above that July high. Okay. There was no schematic of distribution where you have your UT, UTAD, LPSY, minor sign of weakness, major sign of weakness, your preliminary supply by climax. And I think a lot of that happened within the July window. So I think that we're kind of developing a schematic here on the SMH weekly as we speak. Does that mean that we top tomorrow? Does that mean that we top in the earnings window? No, it does not. I'm just saying that I really want to pay attention to what happens off of 283, 280 flat, basically a $3 range from 283 to 280 on the weekly time frame. Because if we start to slip beneath that, or if we start to aggressively pull beneath that with like a nasty headline, there's a lot of volume, and then you trap a lot of the longs over top of the highs. I mean, that's whenever a lot of panic enters in, and that's whenever you have a lot of the longs forced to basically sell, and then this thing pulls way, way, way lower. And then structure after that's very important, right? So all it takes is really one bad candle on plenty of these charts, like the banking sector, like SMH, like Nvidia, for example, on the weekly time frame, like Apple's redistribution within that bear gap from 220 to 224 by the July OPEX, or by the earnings report, or just any sort of flush with a slight gap up that doesn't meet the implied move, you can definitely use that as leverage. And then charts might not look too good, right? And then this is not a promising bull market that we all talk about where, oh, SPX is going to 7,200 this year. Like, no, I don't think that that is necessarily the case yet. And nothing has really been proven that we're entering some sort of crazy bull market that's just going to continuously grind higher throughout the next year and a half. Like I said, guys, we are right now, what we're sitting at is 1.7% over the high. Shave off almost 0.5% from those gains, too. And now we're about 1% over the highs, and everyone's freaking out talking about like how guaranteed that this rally is going to be within the market. And I just don't really agree with that quite yet. And I already know we are going to get our pullback into where, if you do think the market's going to continuously move higher, you're going to get a better opportunity down the road than what you have right now, just blindly chasing into over 620. So, sorry, I had to take a drink. Um, Another thing that I'm going to be looking at would also be ARK. Really no sign of ARK stopping yet, right? And that's a risk-on sector where you get your risk-on names that are looking really good. A lot of your growth that's remaining relatively strong, and it's not really going to. I don't think the market is going to top until you start seeing signs within the growth charts starting to cool off. You start seeing some of your risk-off names starting to obviously gain a lot of a little bit more of like an established base, or like a super nice kicker candle outside of a base, or just a really, really, really nice continuation candle, like for example an XLE. Um, this sector is definitely one that's going to be on my radar here for a rotation. If tech wants to distribute, if those banks want to fall and completely fail off of those highs. And then we go over to the consumers, and that's kind of the same thing over there with the consumers. Is this the prettiest weekly candle on the consumers? No, it's not. Um, could this easily find a continuation to the upside off of this base while tech kind of sells off through these reports and sells off after the July OPEX into the August and August into, I would say, probably the November window? Yeah. I mean, you can find a lot of other sectors that are performing very well and honestly easier trades than trying to pick what the relative weakness is really going to be. Um, Another name that I have in mind is going to be Meta. Do I think Meta is ready for its full potential on the downside yet? No. Would I like to see a continuation up towards 741 over 740 minimum and preferably into 750s? Yes, I would love to see that. Just because I'd like to see the behavior happening up above that high and up above the high that was made on February OPEX. This is February OPEX here. So, um, yeah, a lot of these names, they're kind of lagging behind, and they're not really showing any signs of complete and total distribution yet. But whenever you're creeping up towards the highs and then it looks like you're flagging and it looks very promising, and then so you break out of that flag, and then the next following day get some sort of engulfing bar that looks like like really bad. Like for example, Meta sees its continuation through the highs, and everyone thinks that this is just some lovely trade to the upside that is like so easy, and then you get this engulfing bar that closes back beneath those highs after maybe like a day or two continuation above. And that's all I'm really waiting for. That's what I want to see for, you know, a healthy short side trade. I want to see a lot of these names failing. I want to see names like um, AMD, for example, that were big underperformers from the previous year into this new year, which are, they're catching a lot of steam. There's a lot of momentum. There's a lot of volume pouring into the name. I mean, the tape has been really, really liquid, and you can see the amount of pressure behind buyers that are entering into a name like this. And even these names, reverting back into where they should be reverting to. For example, right here, 153 all the way up into 167, we have this big, big gap, and this has been predominantly distributive. What's going to happen into that? I don't know. I mean, is this going to be a short side trade of mine? No, I don't think AMD is anything worth shorting at the current moment. But is it going to fail over the high? Are we going to get this elevated volume profile throughout most of this range into where highs start to fail, and then we can start to conclude from where this volume was coming in was early start to distribution, right? Sometimes you'll see where you have bullish price action, and then within the midst of the range, you start to get this nasty failure off of these spots where it would make sense to find failure off of, and then you get really nasty volume up towards the high, which is like kind of like your climactic high, and then you can start to conclude throughout the range where the volume profile was increasing day by day that there was distribution taking place within that price action that is kind of hiding that. It's hiding the fact of distribution taking place, right? And we can see that even through like TSM on this really, really nice bull peg candle that happened in October of 2024, and then the distributive sign happened all the way into January. Oh, that was a nasty voice crack. But that's all I'm really saying in terms of, volume patterns and just waiting for what happens as we kind of find that continuation into those highs, into those gaps. And then what happens from those gaps is also another very clear key indication of whether or not we're going to get continuation in the market or not. I mean, you have to see strength kind of maintained within a lot of those names because you're going to see reversion one way or another with names like Microsoft. This is not just going to go on a straight line for 4 quarters in a row. It's the probabilities of that happening are very, very slim to none. And these are very large companies within the S&P that are kind of holding up a lot of the tech together. And whenever those start to kind of roll over what's going to happen with the laggards? What's going to happen with names like Google? Are they going to successfully kind of prop the market and hold it up well? Or is everything going to kind of participate on the downside together and we get a really, really nice. Ooh, that's rough. Really nice, smooth, clean continuation to the downside. I think we're going to get a very nice, smooth, easy continuation at least into, I'm probably going to say 580s. I'm targeting at some point throughout this year. Um, could it pull lower? I think it could, but that's not even asking for much. I mean, we're looking at like a 7% decline within the market here. Possibly, I would say at the worst, 4 or 5% decline, or I'm sorry, at the worst in terms of like, looking at the short side of things, I think 600 flat is going to be something that is like what I'm looking for minimum. However, if we do start to break beneath basically the weekly level off of the quarter one highs, which is basically 609, 610, we'll call it 610. If we start to break beneath 610 slash 613, about a 4 point range from 613 to 609, and we start to fail closes on that and a proper base above that, leading into the back half of quarter three, leading into like after the reports, tariffs are implemented, which I think are going to reflect in an economic way. Maybe you start to get your 10-year breaking out as this level fails that we're talking about. I think it could all kind of end up kind of bad for the market leading into 2026, and it could, delay itself until 2026. I mean, timing is everything when we're talking about, having exposure to options here. So definitely all I'm really going to be watching this week is going to be the bank reports. Um, it's going to be TSM on that report. And then we also have another report that I'm going to be looking at, which is Johnson & Johnson. Only reason I'm really looking at this report is because we do have some nice compression on the daily chart. And we have a very clear, defined level of risk to kind of take in terms of if we open above this level, open beneath it. I'm really only looking for like a flush where it presses up very tightly against this resistance right up here. And then you get a slight gap to the upside. And then what I think could happen is if we end up breaking out of this base and out of this resistance, I do think we could potentially pull in a 162 to 166, which would call for like a really, really nice flush trade to the upside if we weren't going to meet the implied move. However, just kind of gap up and claim and hold this level and use it as like a spot to risk off of. Obviously, it's going to be very spready, so I don't really plan on putting any important size into something like this. But this is one of the few notable charts that I see in terms of earnings reports for the week where we have levels to trade off of and we have spots here that make sense for a trade. I mean, it's not going to be anything serious. If I do end up taking weeklies, it's going to be size for zero, looking for, 700+% on a target of at least 4 deltas to the upside. And with flush cons, that could happen. There's really nothing else on the earnings calendar other than Pepsi on Thursday before open. So, for example, we talked about rotations. We talked about, within this window, what's going to happen with some of these underperforming consumers, what's going to happen with the really, really well performing tech that are just, like I said, kind of just creeping over the quarter one highs. Are we going to get really nasty, gross candles in some of those tech charts? And is it going to reflect with on the like under the hood almost with like really nice looking charts within some of these consumer names like Pepsi? I think Pepsi is a pretty damn good looking chart as long as we don't move too heavy to the upside. And the reason I'm talking about this is because we do have a range we kind of built from the beginning of May, whenever May OPEX happened in the market, and we had a decline within the S&P. This is a pretty decent decline that happened in the S&P as well as in the Nasdaq, and then it kind of just held on to that 200-day and started to see its continuation higher after sweeping this May 12th NWOG. And we had Trump tweets kind of supporting the move to the upside. And that's kind of what started the base within Pepsi, and it never really saw its upside move. Um, However, whenever you're looking at windows where tech is possibly at a moment of distribution where it's, continuously kind of putting in that distribution sequence on the bigger time frames like the weekly, um, this could gap down and put in a spring beneath the bottom of the range at 128. So if this were to see a gap down, for example, something like over here, big time gap down on the earnings, followed by a super nice recovery, and all it really did was it put in a spring beneath the support right over here. And then what it did was it saw a really nice continuation off of the spring of that support of 163 all the way up into 180 within a couple weeks, right? And this is really cheap vol. Obviously, with a gap down and a recovery, trading it within that gap down and being able to identify something going on within that gap down and a really, really nice rotation happening into some of these consumers would lead me to believe that, we potentially have distribution taking place within a lot of the tech charts. Um, as far as Mag 7 goes, I don't really have any interest in any of the Mag 7s other than what happens towards their highs, like AMD into its bear gap. Meta over the February OPEX high. Let it break out. Let it see what it has in store for this breakout. If it wants to break out over top of the previous week highs, which would be the Wednesday high, and then just see what happens. See what happens in terms of, is it healthy? Is it strong? Is it going to fail? And that's kind of what we have with all of these charts other than Apple. That's why Apple has the most objective risk. It has the levels where you can really, really see what's happening, and it has um, the range where you're trying to find expansion outside of the compression. And is that expansion going to be strong? Is it going to be weak? What's it going to do towards the 200-day? We have a 200-day confluence there. We have the previous distributions support here, also a confluence. Um, and we also have a binary event like the earnings that brings volatility. All right. So with all that being said, a lot of this is going to be a patience game. I mean, we can flip through some of the stocks that I like to trade. We can look at China. We can look at anything we really want to. Um, but at the end of the day, I mean, none of these charts are A+ opportunities. Obviously, we have a few that are decent looking. A lot of the discretionary sector has been something that I'm going to be watching. Energy sector is something that I'm going to be watching. I'll probably keep my eyes on like a few. Sorry, I'm tired. I'll probably keep my eyes on a few of the airliner stocks just because they're gapping over their 200 days. If they can build out a little bit of range here on top of this super heavy volume peg, then that could be a really nice, interesting setup here as we move forward. LLY, healthcare name. Uh, Definitely not a bad base. I don't know how the spreads are on the options. I don't really trade this too often, but not the worst base in the world. I don't think it's worth anything crazy to trade. I don't think you should go crazy. Fuck, I'm tired, man, on anything like this. But you take a look at some of these charts, and like a pullback within Moderna kind of interests me. Um, there's a few other ones. Pfizer doesn't have the greatest look. MSTR is in the middle of nowhere. You have Neo coming off the lows with quite some volume. Um, you know, could this be a shares trade on Neo? Maybe. I do I do I take trades on Neo seriously, on any sort of ticker like this seriously, or do I put a lot of size behind options on a ticker like this? Nah, I don't at all. However, you're looking at some of these other names like discretionary, like Nike. Nike is that attracts me. Nike's going on my list, and that actually was on my list earlier, and then I removed it. But when I'm looking at the rest of these setups here in the market, and then I take a look at Nike, I'm like, wow, why would I not be looking at this? This is a really nice bull peg. The EMAs on the 9 and 21 are kind of catching up. You have your 200-day down here as well, right around 71. Do I really care about the 200-day? Looking at intraday price action, no, I don't. But we'll see how the daily chart kind of sets up around that 200-day. And if it wants to pull down and sweep into the gap, I'm just going to have a price alert set for the bottom of this gap and just see what happens. Because I would be interested in trading this one if the market allowed me to, and the market didn't look horrible. And if this kind of just trickled its way lower and kind of consolidated its attention out, like sometimes a stock will kind of like consolidate to the point where it just loses all attention, but it's within a sequence where like you have a super nice peg and then it sweeps into that and no one is paying attention to it anymore, and it's just one of those opportunities where it's like it's a cakewalk almost in terms of a trade. And that's just something I'm going to be watching. Discretionary has been something on my radar that's been very, very, very strong. Is the weekly chart also kind of in agreement with my analysis? Yep, pretty much. Really, really, really big volume throughout the lows, and the biggest volume on the entire volume profile is on a very, very small weekly spread candle that has um, basically an inside bar on the weekly chart, right? And then we have that same amount of volume actually coming in, and actually even a little bit more volume coming in. 197 million volume traded on the week of June 23rd. So when you're looking at this peg, when you're looking at the kind of volume that is behind that, and then what you're looking at is also targets to the upside that have not been met yet. For example, we have one right over here with a gap that ends up towards 89. Wow, 89. That's crazy. Right now, what we're doing is we're peaking at the bottom of the peg from this massive gap down, which is the second biggest volume on the daily chart, or actually the biggest. And then what happened was they built out this base, this bottom support range that has been tested one too many times, and then obviously the tariff environment kind of happened, and it was shaking out all the big players. It's almost similar to like MU, for example. Like you have this huge base set out. They liquidate all the new players that were kind of participating throughout this range that was bullish. It actually was an accumulation. It just wasn't finalized. And then they shake out all the big players into that tariff territory, right? And then they gap it back above and they reclaim the range. And then they build out this really, really nice, strong sign of strength right around that 200-day. And then it sees a super nice continuation to the upside. So yeah, I mean, that's something that to me is very notable with Nike. I think you just kind of have to wait and let the setup brew and maybe look for like an undercut and rally off of your daily EMAs. Maybe let your daily EMAs get a little bit tighter, let this thing chop around a little bit. But Nike's definitely one that's going to be on my focus. Discretionary name, obviously the discretionary sector has been pretty hot relative to the rest of the market lately here. So yeah, I have a little bit of interest over there. Now we go over into Starbucks. We can obviously see how we had a big time shakeout bar after the gap up. Calls were already gapping well over 100%. Shares were up about 7% here on the gap up. but we're looking at a breach into the bear gap. However, targets have not been met, and right now we're failing the 200-day. If we were to somehow break in base and show pretty strong structure back above that 96 spot, I think that, this candle from the upper, I mean, there's not a lot of volume behind it, first of all. Second of all, it is a gap up and technically a positive close from the prior day close. Could it be a shakeout? Yeah, 100% could be a shakeout. Could it be a nasty fake breakout and then end up failing back beneath 96 now and beneath that 200 day? Yeah, it could. That's why I'm just really paying attention to that 96 spot. Probably going to be paying attention to the close before the next following day's gap up. And if you guys go to the smaller time frame, what we're doing on the what we're doing on like the 4 hour and the daily and the hourly is kind of just clinging onto that spot. And I'm kind of interested to see what happens off of that area. Is it a great setup? No. Is there any great setup within the market? No. Pepsi with the report, like I said, either looking for a shakeout, no interest if you gap up. If it's flat, I'm also interested. However, with a big time shakeout and then a really nice spring candle from the bottom end beneath 127 and then a close back above, and then maybe like a high tight flag on the hourly, I'd be really, really, really interested to take a shares position and a option swing position if the pricing is attractive. Now we'll go over and take a look at Ford Motors. Not really anything too interesting with Ford. I own shares in my Roth on Ford. Um, and, Ford is just one of those charts where it's discretionary. We have a shortening of the thrust, 3 lower low accumulation kind of happening here on this weekly time frame and daily time frame with a really nice undercut of the support and then super big volume back to back to back to back to back weeks with the bottom and the bottom, meaning the lowest of lows on Ford for what we've had lately, had the most volume behind it with a really nice reversal bar. And we are also deviating away from a candle on the weekly chart that is probably quadrupling its ATR in terms of weekly average true range. If you guys want to, you could take a look at the weekly average true range on a name like Ford. It's probably very, 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 very low, but whenever you're quadrupling the ATR on a weekly candle, and then you get no structural retest into that gap, and then you get a hot sector, and from the lower end of the chart, you're breaking a support, however, you're stacking volume beneath that support, it becomes a really nice accumulation in a reversion trade back to the upside to magnet to the heavy volume gaps like we have right here, July 25th. And that's why Ford was an A-plus chart. I mean, you're looking at ads beneath 10 and you're taking those into 12. You're looking at well over a 20% gain with, obviously a potential of this seeing all the way up into 1368 if the market allows for that to happen, right? So just managing that forward position. Valero, very, very, very nice chart on Valero. I own Valero shares as well. Really nice inside bar. It just is kind of displaying leader characteristics in the sector of energy equities here, and you can see how within Valero, what you had was you had a very, very big level. And then what happened was we kept trying to break through that level. It just was not working. And then we undercut the support that was built beneath that was trying to press us up and break above 144. And when we broke beneath that, it was a nasty I mean, minus 14% for Valero in a singular trading day. I mean, guys, that's terrible. And then the recovery has been very, very, very impressive. And what we did was we based on top of the tariff gap with, probably 10 days of compression here. And then once we sort of found that momentum and kind of broke out of that base. We've been holding higher lows ever since that, right? And it's just been a really nice trend um, that has been established ever since the base on top of the tariff gap here at 125 to 126.50-ish. And I've just been managing my position based off of higher lows, right? And what's happening off of these levels, and are they claiming the top of the tariff gap and holding that and putting in a higher low off the 921 on the daily time frame here? And it's just a really nice, easy, stress-free shares trade that I don't have any plan on cutting anytime soon, if you want me to be honest. I mean, I think that this can pull all the way up towards the high 160s, right? And that would obviously net me even more of a return of uh, we're talking, you know, another 11% on those commons, and that could be great. I mean, stacking some of those wins over there could be really, really nice. Well, the market obviously shows us more opportunity for the options side of things, right? We go over to ERX, and we can see how within ERX, um, pretty big volume overall throughout a lot of the bottom end of this chart, and the weekly does not look that bad. Really nice undercut on this weekly support towards 53, and now we're reclaiming that on the last week's low. So I can start kind of establishing a trailing off of that point. And then we have targets in mind for the upside where, this could obviously see a rotation alongside banks and tech slipping over top of those highs. And if that were to happen, ERX would be something that I think would see a really nice continuation if it got over 57.81 and then started to breach into the gap and hold the gap and claim that gap as a buyer's territory on the 60 psych. So I think the 60 psych is on the way for ERX. That's where I'm going to take my first trim at. Um, there's not really much more to talk about within the market. I mean, you have some of these names that just look terrible and very, very distributive. For example, like Pan W. This chart looks like really bad, like really, really, really terrible. But we need a little bit of like something to base the trade off of, you can't just chase into the lows because you see a distribution and you're like, this thing is gonna die and it's gonna capitulate. It's gonna pull a crowd strike and it's just gonna fall and never recover. No, 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 no. We cannot do that. We broke structure, and we broke a pretty big support that was trying to hold us like a base here, like around 195, right? If we were to get like formulate like some sort of weak low tight bear flag slash inside bars on Pan W, I'd probably be open to like an intraday setup to the downside if we were to build like a little bit of range down here and kind of consolidate this one and maybe it looks really, really weak from the bottom end of the chart. Maybe you get a few inside bars that are trading within that Friday bar on really low volume, really tight range, and that could be a really nice trade down the road, right? But for the time being, like we don't have that right now. We don't have that to really, base a trade off of. So can we touch it? To me, it's just not a super high quality setup. Um, we'll go take a look at some of the precious metals. Obviously, those are breaking out. Commodities look pretty solid. A lot of the commodity area of the market looks pretty good. DBC has been one of those weekly charts that has just been really on my mind here. I think a lot of the commodity names are going to perform very well from now in like from a year from now. A year from now is the time frame I'll give for the commodity part of the market here. DBC, it's been an interesting shares trade for me. I really wanted to take this very big gap down and then the following gap down the next session, which put us at like a 5% discount within just 2 trading days. Just haven't really got my hands on anything over here yet. So I'm gonna come back to this chart and take a look at it. But yeah, DBC is just gonna be something that I'm watching. Um, and does that mean that, I'm ready to buy tomorrow? No. I could wait a little bit and just wait and see how that weekly chart kind of folds out. Um, TSLL trimmed a lot of my position into the close last week just because the 315 target has been one that has already kind of been met. So not really much to talk about there, but Tesla could shape up throughout the week. We just kind of have to see what happens throughout that week, and if uh, if that could happen, then Tesla can still be something that I have in mind, right? It could be a discount pullback. It could put in like a higher or low somewhere throughout here. Does the price action look super strong or indicative of any sort of crazy continuation? Um, no, it does not. Um, would I be open to an intraday trade on Tesla if something went down again with like Elon and this thing gapped even lower and then revisited the current swing low? Um, yeah, I would be open to that. Um, we go over into SPY now. They have 20 signature prints on SPY up towards 626. So with all of that being said, price can obviously move up towards these orders driven through data. We do have a CPI report this week. If we were to see early week continuation and a recovery of this gap down, and that continuation leading us into new highs and up towards 626, then I'm looking for the midweek reversal back to the downside through CPI. However, I will not trade through CPI. I would rather just wait for potentially an IV crush and then something to happen on the Thursday slash Friday session and potentially have leeway swinging that into post OPEX window of weakness. Um, that's just kind of my plan over there with SPY. If we were to get early week continuation, if we were to not get early week continuation and actually early week blood, and they kept building the ask off 626, and they started to build the 3 lower low sell climax beneath that and beneath the Friday low, which we're actually kind of like revisiting right now. And I'm very, very, very open to here, let's go to the daily. Where are we at? All right, so we're going to open up around towards, I believe, 620-ish. I believe. Let me go check Robinhood. Okay, yeah, so we're slightly above 620. I think 620 is just a very, very key spot. It's basically this gap that they've been trying to hold as a support. And they undercut it, they held it, and then we've kind of just been building out that higher low structure ever since that point. From that low July 7th. So if they wanted to build lower lows that were kind of on an accumulative side, and they started to continuously place sells up towards 626 right before data for like CPI and whatnot, I'm open to looking at like long side vehicles for the mid slash end of week area leading into the OPEX. I'll take a look at like the dealer positioning leading into Thursday, Friday, and potentially for like an end of week, like extra juice behind the rally for the expiration. But I don't really want to like get too. I don't want to get like too like aggressive on a dip that there's no high quality behind like any of these dips. You know what I mean? Like there's no like quality behind like that level. Like I don't. There's nothing like on the higher time frame that's like, oh, that is an opportunity you don't want to miss. Like over here, it's way different, guys. Like this is really nice consolidation, and this was really really nice, like really weak consolidation to the point where like I was looking short from like 604 down into at least this gap, and then it was just really weak action in that gap, and also into like your 20-day, and also into this back test of this resistance now, potentially a support. to the point where you have really clean risk levels from the higher time frames to use. You have super nice orders that we're pulling down into. You have headlines that are bringing the volatility. You have the end of June here as well into the new quarter. You have a high above you to target. I mean, you just have so many things that make so much sense in terms of, you know, a dip where you're putting on a lot of size behind on even further out expiration. Over here, I mean, there's just like nothing. Like I feel like there's going to be so many traps within this range, and um that's why like I'm not like super excited to trade on just like an index perspective here moving forward. I mean, it's indexes are going to be a nice gauge here, but like the equity market's dispersed, right? So you have tech charts that give you super nice levels, and then you have other tech charts that are just in the middle of nowhere, right? The tech charts in the middle of nowhere, don't really waste a lot of your energy on those. At least I'm not going to be. I'm going to be just kind of looking at those and how they behave while I trade some of these names that just have super clean levels to trade off of, right? Um, so yeah, Apple's going to be one on the top of my list. Um, Silver's not bad. AG, I'll take a look at that one, Jeff. Really nice breakout on AG. Really nice SOS on top of this range on the weekly chart. Just sellers could not do anything in terms of giving up. Like buyers were just clinging on to the upper end of this candle. Super nice healthy spread on that weekly candle, plus 34%. Really nice high tight flag on that weekly as well. Basing over top of this level here, $8. And it was just a really nice SOS within this accumulation, with the right side of that build out of the range being of pretty heavy volume, right? So that's whenever you get volume exceeding all of the other volume, but it's very elevated volume profile. They're accumulating this, and you know there's so much room left in place here for a name that looks like this, in my opinion. This is just displaying strength on every time frame possible. So yeah, I mean that's a good trade. I mean your fill in the $8 range, mid $8 range would have been much better. Did you go over any Google expectations? Great moves on Friday off intraday anchored VWAP to 181 plus. Um, so with Google, I still think that this is like an attractive reversion trade to the upside. Obviously, the market conditions have to call for this being something that, you know, can see its continuation. I think that there's just a very large level in play here off of 182 to like 181. And I think like a really nice break and base above that, and that could be an early week trade for like an intraday scenario. If it were to break and base above Friday's high, this high over here, June 30th, and eventually kind of just build a path of least resistance on the hourly, with range really coiling before expansion off of, holding above 180 and then pressing up really tightly against that level. And then it'd probably break out and see its continuation for, I would say, at least your next stop would be up here at 183 flat. And then if it were to claim 183, there's really nothing stopping this one from going to 10 points higher, all the way up towards this bear gap up here at 193. Are the volume patterns and structure from the bottom end of the chart anything that is so clear to me? No, and that's why I think that this has just been more primarily a shares trade than anything else. Buying into the dips and, willingly being able to average down from this April candle, right, and into that April 9th candle and into the April 7th territory, right? But from the super lower end of the chart, I mean, it's just been building out these higher lows. and trying to break and base and hold on top of like bear gaps like this that were very big levels. I mean, this level right here has been one that has just been very big, right? And we're pressing up against that into this week. So if buyers want to pin this thing on the bid over top of like 181 to 182, I'd be I'd be willing to take a trade on this one. So yeah, Google's definitely one that's on my watch list. Um, and then everything else, guys, um, like industrials, there's a few industrial names that don't look bad. Earnings calendar is just basically banks. Etsy is, in my opinion, in a really nice base of accumulation right now. Could be a shares trade. Um, but yeah, the smaller time frame in SPY leading into the data sets and what happens with those orders um, leading into those data sets as well as the IV crush behind, a super nice asymmetrical opportunity with options is just something that I'm really valuing here moving forward. So Monday and Tuesday, Wednesday tape are just something that I watch like a hawk and I wait and I see what it looks like leading into the data, right? And then data, it's fair game for each side. JD is something that I'm also going to be watching, just to see if it's going to pull into this gap and create an opportunity off the bottom of this bear gap here, or this bull gap here. I just think that this is just a really, really, really nice base where I don't know how much sellers can really break this one beneath that 31 level or that 32 spot. And if they pull this thing back above that 32 spot, I have a big time interest in taking a shares trade on JD. We go take a look at HSI futures. Not the prettiest of candles considering the three higher high pattern leading back up into the top that was created in March. Could we see a little bit of turbulence in the China markets? Yes, we could. And is the Friday candle, like I said, anything that is super, super ideal to see? Nah, it's just really not. Um, so yeah, we'll see what goes on with like China futures and see what goes on with like JD. I'm probably going to be adding JD to the focus here. I remember Queb was pretty tight as well. So we'll take a look at Queb here real quick and wrap things up from there. Queb, super, super tight on that weekly time frame. Is there any super nice level to trade this thing off of? No. And does it trade bad? Yeah, trades pretty bad. Could this one see a kicker candle here soon to trade it, to base a trade off of? It could, but like I kind of want to wait for that rather than just like taking a blind stab into a chart like this. Like yeah, it's coiled, but I'd rather wait for the expansion on a chart that looks like that. So I'll have alerts set on like Queb, but that's just like a back pocket kind of watch. Um, we could go take a look at like Dell. I don't know how. Nah, trash. Hood. Someone asked about Hood. Hood could be a nice trade this week within this range. Yeah, it definitely could. I mean, there was a lot of volume up towards this high, so it's kind of like that and Palantir or two in the same that are struggling to get over the top of their highs. Where there's a lot of volume behind like Palantir's June 27th rebalancing candle, and clearly they sold this thing off pretty aggressively off that June 27th bar. And I think throughout the July OPEX, this is already kind of building out a distribution to take advantage of. Would I like to see new highs that put in another footprint like we had June 27th? Yeah, and if we do, it's an A plus setup and it's an A plus short. But do we have that for the time being? No, we don't, and that's why it's just kind of on the back pocket. Watch here, Palantir to the short side. I'm going to add JD and Queb to the long side. Moderna shares is a trade that I definitely have a little bit of interest in. We go over to the sector list and we can see how some of these sectors are not, like Google's really the only thing that I see in communications that makes sense. Within consumers, like we have a lot of them in supports. Like what's Procter and Gamble going to do into the tech window of earnings? That'd be one that I watch down the road. Probably just shares over there, and then the rest would be like Lulu, for example. This is another discretionary name, just hasn't seen the heat that a lot of the other discretionary names have saw. For example, Nike's really strong. Lulu's kind of lagging behind the move of Nike. Um, does that mean that Lulu's over? No. And is it, trying to hold on to a very critical spot on the weekly? It is, but the weekly's not very telling right now on anything happening. Pretty big volume stepping in towards those lows, and yeah, I don't know. Maybe Lulu will be a trade down the road right now, but it's just not a chart of interest for me as we speak. Um, so yeah, a lot of the commodity stocks look pretty damn good. A lot of the tech is up to the reports. Banks, very, very key spot for XLF in the weekly chart on XLF. Um, could be a few flush trades on banks. Um, industrials, really no sign, nothing within industrials that is super worth watching. And then healthcare, J&J doesn't look bad. LLY might be something that I watch moving forward here. Moderna kind of already gone in terms of looking at a high risk reward shares trade. Um, like TMO, like names like this are in pretty nice bases with like pretty heavy volume behind them as well. When you're zooming out and looking at the bigger perspective of like the volume profile here, and sweeping out the weekly lows from 2023. Um, so could be some decent opportunities over there with really short risk involved. And yeah, that's about it. I mean, I have Apple on my list. I have J&J Flush. I have potentially Starbucks, potentially Lulu. I have Nike on my list. I have Pepsi and its report on my list. I have JD and Queb kind of together in a list. Google for an intraday trade. And then SPY, what happens with the early week tape leading into that data set. And if there's a sell climax leading into the data set, I'll probably look for the IV crush and then the reversal following the IV crush, picking up some cheap cons, probably targeting next week 626. So yeah, especially if they build that order and they continuously build those asks that are already placed up there towards 626. But we could end up breaking structure on the hourly on this gap down with a continuation tomorrow. So yeah, there's got to be like they got to bid the lows into tomorrow if we start to see blood and maybe another 0.5% extension to the downside. And yeah, that would call for probably one last long setup before the OPEX week, and Vixbration happening here midweek. So probably going to be very telling into Wednesday, I would say. So yeah, that's all I really got. PanW short side potentially if the action subsequently to these distributive candles are pretty weak. I mean, if this were to do something like this, it would look terrible. Is it going to do that? I don't know. But if it does, it would be lining up some pretty nice opportunity. And then within small caps, very big level within this chart, in my opinion. Basically retesting what would be the weekly breakout failure now here, like this level right here in the high 220s into like low 230s. It's pretty big, and if you guys go to the weekly or the hourly chart, you can see how doesn't have the cleanest or the worst look. And I would really like to see what happens above 226 on small cap. I think that this could honestly be a really nice short. Only exposure I have to small caps right now is Anavex. It's kind of like a waiting for their approval on their drug. Kind of have a positive outlook over there with the Anavex, but I think Anavex is one of those charts that look really, really, really nice beneath like $10, $7, like into $8 to $7. I think this one's going to move back up towards 14, so we'll see what happens over there. But yeah, I mean that's basically all I have, guys. If you guys have any charts you want to ask me about into tomorrow, I'll probably be live tomorrow. But that's all I got for now, and we will see what happens with Apple, Google, and our names like Nike into tomorrow. Those are going to be my first looks. And then TSM is another report that I'm watching. So I'll see you guys later. Have a good night.